I'd like to talk today about understanding the banking troubles and what they're going through right now, and why the banks are willing to accept huge discounts on your home mortgage. What's going on in the lending climate today? Well, the banks are in trouble. We all know the banks are in trouble, and that's because of overlending. They've done lots of bad loans over the past few years. They've got a ton of bad debt, and they've over leveraged the cash that they have available. So these loans that they've had from the last 5 or 7 years when they were making those bad deals are finally coming due. And the people that were doing these interest only payments, the 5, 7 year arms, they're coming due now, and people just can't afford to pay their mortgage anymore. So their options are they're either being forced into a foreclosure, or they're making that decision to walk away and do a strategic default. So there's something called the Texas ratio, and that's a measure of the banking credit troubles. And the higher the ratio is, the more severe the credit troubles. So it's calculated by the sum of the non-performing assets by the sum of its capital, and the ratio, the closer it gets to 1 to 1, is when the banks are in danger of failing, and the feds monitor this very, very closely. And as soon as banks are in danger of failing, they come in and they take over the bank and they try and fix the problem. Now, obviously, that's something that the banks don't want, so they need to get as much cash back in their books as possible. So it's a balancing act every day. It's cash versus capital. And the banks need the cash to loan and to keep the doors open. They need to get those non-performing bad debts off their books, and it's a daily balancing act of what they can afford to offload today to get that cash. Now they have to take the hit now because they've ignored the problem for too long. They've been, just trying to put it off so it doesn't look bad on their books. But the fact is, all of the banks need cash and they need it now. So how do these banks determine a short pay value for your home loan or your note? There's a process to determine the liquidation of a property. The banks have to go through, they have to get attorneys, they have to go to court, they have to go through with the foreclosure process. Then there's maintenance, there's winterizing, there's dealing with break-ins, there's insurance, there's tax, there's paying for brokers to try and list the home again, there's closing fees, and of course there's the time it all takes. Now say that takes 6 to 12 months. There's also the loss of value in the home. Now I'm here in Florida, and it's, lots of homes are 3 to 4 years to go through this process. So the banks are looking at this, and they're saying, well, if we get cash now, we can actually do something with that cash. We can leverage it with better deals, and so they determine a price that they're willing to accept instead of going through this whole process. So here's an example of what's called the net present value. Say that there's a loan for $1 million, and the bank has that loan, and they realize it's a jumbo loan, it's a very high risk loan to them, and the value of that home now is 700,000. Well, they know that the homeowner is probably not going to continue paying on a loan for $1 million, and going through that whole process that we discussed before, going through the whole foreclosure process, they might determine that, you know, after all that, they might get $600,000 back. So the bank would be willing to accept a short pay for $600,000 now instead of going through that whole foreclosure process. And as they say, they can leverage that cash now to fund better deals. So that is basically what is going on with the banks right now and why they're willing to accept huge discounts for your home note. So I'm sure you got more questions. If you got questions, we've got answers. Call 850-368-7177 for your jumbo loan solutions.